I just had one of my biggest trading days ever, making $37,000 in a single trading session. In this video, I'll break down exactly how I did it. We'll cover the strategy I used, including entry criteria, stop loss and targets, the risk management, and when to change bias. But enough of the talk, let's get right into the video.
All right, first of all, we are gonna cover the strategy. So I try to keep things as simple as possible. First thing we're gonna do is identify our key levels. All right, so is the market respecting old highs and old lows? This is extremely, extremely important. It just really gives us an overall indication of which direction the market is going to go. So let me just slide over here before we get into the trade recap, obviously. Is the market creating higher lows? And is it respecting these old lows? Also, in an uptrend, we might see short-term lows being ran out and then still respecting. So those are the two key indications that I'm looking for when I am leaning bullish in a market, and vice versa when I'm leaning bearish, right? Are we respecting old highs, right? Creating lower highs and lower lows as the market's going down, or we might be running out short-term highs and then respecting those and then trading lower. So these are all the characteristics that I'm looking for when I'm just trying to pick a direction on the market. Okay, are we respecting those old lows or old highs? And are we running below old lows, short-term lows, and then rejecting? Or running above short-term highs and rejecting? The next thing is the market respecting fair value gaps? Okay, so if you guys don't know what a fair value gap is, it's essentially a 3-candle pattern where we have this candle here. All right, I'm going to draw a bullish fair value gap. Then maybe we get a candle like this. Actually, let me draw it like this. Sorry, this is the open. We get a candle like this. Okay, and then the third candle creates something like this, where we don't fill in the prior candle. So as you guys can see, we have a gap in price. So we have this, between this high and this low, creates a fair value gap. So this is our FVG. All right, and vice versa if you're bearish. So this is giving me an indication that order flow is continued bullish. Then, do I have a clear target? So when I'm trying to pick a target, it's either going to go to liquidity or inefficiency. Now, when you're trading with the trend, okay, so if you're trading with the trend and the trend's going higher, then it's okay to target previous highs. But if you're counter trend trading, and I want you guys to take note of this, then it's different. You are probably only going to target inefficiencies because it's not going to go to those old highs or old lows. So let's just say, for example, the market's going higher. All right, the market's going higher, and you're trying to target one of these old lows. But the problem is there's a fair value gap that's resting here. So instead of you targeting the low as a counter trend trader, you really only should target the fair value gap, because in an uptrend or a downtrend, it should not go to those old lows. And that's why it makes your targets low probability. So those are the three things that I really look for to keep things very, very simple. When I'm looking for a trade setup, do I have a bias? Are we respecting this order flow? Right, so we have fair value gaps. And do I have a target as far as liquidity or inefficiency? If I have all three of those things, then I have a trade setup. Okay, so let's break down the trades that I took. Okay, so the first trade that I took was a long in YM. Now this trade, in my opinion, extremely, extremely obvious. At the time of this recording, we have not taken out those all-time highs, although we are very, very close to it. So what we're looking at are these equal highs here. Okay, so like when I mentioned the target, I'm looking for extremely clear levels of liquidity that make sense. Not only that, but we're respecting these lows in here. Okay, I wish I had more data on my charts, but I don't. And we're rejecting away from short-term lows. So you guys can see in here, we're taking out liquidity, but then it's completely rejecting the other direction. So all the indications right now are for price to go higher. So my bias is bullish. All right, and this is my target here. So when I drops down, this is an hourly chart, by the way. So this is my higher time frame analysis. I think we're going to trade to this level. So my lower time frame, all right, I'm going to break break this down for you guys. All I need to see is a displacement away from these specific levels. I don't need to see everything. I'm not plotting all the levels on my chart. Okay, I'm just looking at the levels that really stand out to me and really make sense to me from an order flow perspective. So what I'm looking for is just this fair value gap to be respected. Okay, and I don't really need other analysis to add into this. All I need to see is that the last hour, right, the last previous, and these are hourly candles, by the way, these candles on the right here, and this is a 15-minute time frame. So, you know, one of these candles is showing you 4 of the 15-minute candles. So all I need to see is the previous hour closed extremely bullish. We had this bullish displacement, and then all I'm looking for is a retracement into this fair value gap. You guys can see that it's also trading into what? A 1-hour order block. All right. I have my stop loss placement here, which is roughly 50% of this level of these down closed candles. And then I'm just targeting, I believe this is a 1 to 2. And here's the final result. So obviously you guys can see where the candle was originally. So here's our hourly candle here as the trade's going on. But then look at how it closed. Okay. So these were all signatures that I'm looking for when I'm trying to position myself in an hourly candle. I want to see it actually open up and trade lower. Okay, it's opened up, traded lower into what? A fair value gap. I'm going to place my position long with the expectation that the hourly candle is going to close bullish, which it did. Okay, and then the next hour, so at the top of that hour, I sold 10 contracts and I left 5 running. So you guys can see that I bought 15 here, sold 10 of them, and left 5 running. And as this market was going higher, I adjusted my stop loss. Right? I don't need to get the full target out of this trade. Okay, that to me is just being greedy. You know, if it gets this close, I'm just going to collapse the trade. Okay, I had a bias, the order flow was being respected, and I had a clear target. So going over the target again, it's all the way up here, these all-time highs, extremely clear target. The order flow is being respected, market structure is being respected, and I have a very clear trade idea. Now, one important thing to note is how we rejected the previous hour. So, like I mentioned, how we ran below this old low is extremely important. Because if the market were bearish, why would we go below that low and then expand higher? And that's really all the indication that I need to understand that this market is going to continue higher. So once we get the rejection, right, I'm buying on the fair value gap, retracement on that next hour, and then as it's going higher, is giving us possible areas to add into the trade, although I didn't. This signature here is really all I'm looking for, this signature of rejection. But recognizing these rejections real time is just one of the many confirmations you can use. If you want a full detailed guide on how I find and execute specific setups, then make sure you download my ultimate guide to trading executions. I'll leave a link in the description. Okay, let's go over trade number 2. Now, just like trade number 1, it had all of the criteria that I was looking for. Okay, so we had a run above this buy side liquidity, failed to displace higher. We got an inverted fair value gap here. So it's already showing me that the order flow is possibly changing and turning bearish. Not only that, we have a new day opening gap here. Okay, so my target was a very clear inefficiency that I was targeting to the downside. And as you guys can see, it wasn't I wasn't risking a whole lot to make this trade. So this trade ended up being a loser. Now, I had an issue with the trade copier, so kind of disregard one of these entries because I pretty much sold it and then bought it back right away. So you guys can see that I sold it at 21,878.25, and then I bought it back at 21,878.50 because I recognized that it wasn't copying to all my accounts. So this entry here, sell to at 21,880, was the actual entry. And off of the open, it started to kind of respect that level. So I actually entered a little bit early, but you guys can see that I had to sit through a bit of drawdown before it actually started rolling over a little bit. And then once it rolled over, I moved my stop loss to this high. So you guys can see that eventually I took a stop out here. Now you're probably wondering, Kyle, you just had a winner. Now, how much did you lose on this trade? So let's break down the risk management. And I'm going to just talk about this using a futures example. So let's just say you have a $150,000 futures account. All right, and for purposes of this example, I'm only going to talk about Top Step, which gives you a 4,500 trailing end of day, which means, at the end of day, it's taking a snapshot of your account, and based on where your account is, up or down, it's going to trail that. So your highest equity point, let's say your equity high is all the way up here at 153,000. Well, it's going to give you it's going to give you $4,500 in drawdown from that highest watermark point. So if your balance at the end of the day is 153,000, right, then your max loss is going to be what? 149. Is that right? Or is it 148,500? So your max loss on that next trading day is going to be 148,500, right? Because that's what? $4,500 from your highest equity mark. Okay, so when I'm thinking about my specific risk management, I really only care about how many trades can I possibly take in a row without blowing up that $4,500 trailing end of day. Now, you guys can do this a little differently, and some people will recommend, risk 1%, risk 2%, risk a 0.25%. The reason I don't like doing that on futures accounts is because sometimes the trailing end of day drawdown is very, very tight. And with a firm like Top Step, I believe they're only giving you like 3.5% of drawdown. Okay, so if we just it's not even 3.5%. So Top Step, this 4,500 trailing end of day is not even 3%. So if you try and do 1% risk, you're going to blow up your account in 3 trades. Okay, so the way that I do it is I take this $4,500 and I say, okay, what is my max losing streak? And let's say my max losing streak that I could possibly sustain is 5 trades. Well, I don't even want to go on this max losing streak and then blow the account. What I want to do is give myself more of a buffer. And let's say if I want to give myself 10 trades. So if my drawdown is 10 trades before I blow the account, then that allows me to risk how much? $450 per trade. Now, this, I would say, is still pretty aggressive for most traders because you will possibly go on streaks where you're losing 2, 3, maybe even 4 trades in a row. And then once you're down that much, right, it really has an impact on your psychology. So I would even recommend to risk even less, right? Maybe $250 a trade. Because when you're doing this, $250 a trade with $4,500, now it's going to really take you how many trades before you can lose it? I believe it's 18 trades before you blow the account. So you could, draw down, you could go on a bit of a losing streak and still not have to worry so much about blowing the accounts, right? If you lose 3 or 4 in the row, it's not the end of the world. You guys can always pick yourself back up and get yourself in sync and then take that next trade, all right? All right, so we're 1-1 on the day, but we're not done yet. Now, you're probably going to ask, what do I do after a loss? And that leads me into my next point, is when to flip bias. So, as you guys can see, we took a loss trying to short this inverted fair value gap. All right, coming back to this same chart, this was the 4-hour fair value gap I was mentioning. But if we drop down onto the hourly time frame, we can see that we have now what? We formed a 1-hour inverted fair value gap. So going back to the original, criteria, what I'm looking for, are we respecting these fair value gaps? Once they're disrespected, now all of a sudden I have a possibility to change my bias and expect that we're going to see higher prices. Okay. So here is what I was looking for. I was looking for this buy side liquidity and then eventually all the way up here. So if we drop down into the lower time frames, okay, this is kind of what I'm looking at. So look at this hourly structure. The past couple hours, and I didn't enter right away right after this hourly candle. What we're looking at is this candle here. Okay, so this hourly candle, I entered on this one here that turned bearish. So this candle here, you guys can see that we have a candle that doesn't have a wick on top of it. And that is really my draw on liquidity for this hourly candle. So what I'm looking at is us, are we respecting those old lows? Yes. Are we rejecting liquidity? Yes. Okay, so what I'm looking at is us just retracing straight off the open. So here, trading lower, off of the open. This is my power of 3 that I'm looking for. Okay, so we're taking out some equal lows in here. So these are the equal lows I'm looking at. And we have a 15-minute fair value gap. Not only that, but we have the hourly low that's back here. So what I'm looking for is if this bullish price action based on that hourly inverted fair value gap is going to be valid, then I don't want to see it take out that previous hourly low. All right, so I'm targeting this candle here that does not have a wick. All right, so when we're changing bias, we have to understand that signatures need to be in place in price action for us to go long. Okay, so not only that, we have a fair value gap here, right, that we're keying off of. So this fair value gap is not drawn on the chart right now. I'm going to extend it in time. This fair value gap is really my basis for this long position here. And you guys can see that as I entered this position, right, I'm relying on time to send this candle above that previous hourly wick. And as you guys can see, we eventually made it above that candle that doesn't have a wick, and we eventually traded to this high. And you guys can see here the P&L screenshot from taking all 3 of these trades.
We've gone over a lot in this video, but it's barely scratching the surface of all the things I've learned in my past 14 years in the markets. So if you want to learn the full strategy and trade it live with me each and every week, get me to review all of your trading and go over everything with you, then go ahead and click the link in the description and book a call with my team. If you're a good fit, we'll start working together immediately. But worst case scenario, you come away with a free game plan. So thanks for watching. Also, don't forget to like and subscribe, and I'll see you guys in the next video.